Welcome back to Market Day Report. I'm Scott Shellady, here bringing you the markets. I am the cow guy. We've had an interesting day. Again, after yesterday's kind of messy trade, today's been a little bit tighter, but you know what? The tale of the good news, bad news, we've kind of slid more towards that bad news. We're losing some of the gains that we had. So let's jump in and take a look at what we've got going on in corn. Corn, September up 11 3/4 cents at 567 3/4. But that's still about 9 cents off the highs there. December at 561 1/2, that's up 9 1/4, but that's off about 9 cents from its highs. So again, good news is we're up. Bad news is we've kind of given back some of that real estate. September, or soybeans, let's look at Sep soybeans. Up 8 3/4 cents, right? That's good, 13.91 1/2, but that's still going to be 23 cents off the highs roughly in September. And we had November with a 14 handle at some point today. But right now it trades at 13.82, up 9 1/4, and that would be 24 cents off its highs too. So again, good news, we're better on the day. Bad news is we've given up some decent real estate. What's Chicago wheat got to say about that? We're up 4 3/4 cents in the December. That's 7.11 even, which happens to be about 15.5 cents off of the highs there. Same story. September up 5 cents at 7.02 3/4. And again, off 15 cents as well. Let's take a look at Kansas City hard red wheat. Up 9 cents in the D's at 672. But again, that's 13 cents off of their highs. So more of the same. Let's see what's happening. This has been a little bit more interesting. Spring wheat started to give up the ghost, and boy, oh boy, it sure has. And I believe that's got to do something with canola. Maybe Ted can tell us that in a minute. But we're off about 4 cents in December at 907, and off of the highs of 931. So a pretty ugly showing right now in that spring wheat market. Luckily, we've got with us to explain it all, because we couldn't get by without it, is Ted Seifried from Zaner Ag Hedge. Ted, I just went through that. That was a lot of numbers, a lot of cotton in my mouth on that one. But what do you think is happening here? Again, good news, bad news. We've given back some of the real estate, but we're still higher on the day, except for that spring wheat.
Yeah, for the row crops, we started out trading the things that we should have been trading yesterday. Yesterday, we were trading macroeconomics. We were trading a risk-off scenario with a sharp drop in the stock market, a sharp drop in crude oil. Just commodities under pressure commodities as a whole were under pressure because investors were sort of running to the sidelines based on fear. Today, the dust has settled on that. The stock market's come back really very nicely. Crude oil's had a nice reversal off of its lows. It looks like it's holding in there. I think crude oil may have just found its low for now, by the way. That's allowed grains to come up. But midway through the session, we start softening up a little bit. I didn't see a big change in the forecast, but some of the models, I think, may be suggesting a little bit more rain. So that's part of it. But also look at corn, not quite able to fill that gap that we had over. So your technical sellers are coming in with that as well. For the spring wheat. Yes, something's wrong with the Canada crop, like you said, canola. So a little bit of pressure there here today. But both of those markets are markets that have been extremely overbought and are due to have these little downdrafts here and there. Overall, I still think there's more upside potential in spring wheat. That crop, both here and in Canada, has been really decimated. I still think we go higher.
Okay, so quickly, I mean, the longer it takes to go higher in a weather market, I think the harder it is to go higher, right? Because slowly but surely you start running out of time. It's like an option with expiry. Would you agree with that?
Yeah, I mean, the great roadmap for that is 2012. We put our high in August, we broke, we tried to get back to it in September, and then we broke. But then you have a big rally that comes during the later part of the marketing season as we chew through those stocks. Right. But to your point, Scott, at some point, we have to transition from a weather market to a market that needs to go back and find and re-let some of that demand come back in there once we know what we have.
Well, that's good stuff. Why don't you stay right there? We're going to take a quick break with Ted Seifried. We're going to come back and talk livestock just after this. Welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Kind of coming in strong, wrapping up a very interesting day. We've just gotten done covering those row crops, corn, wheat, and soybeans. Let's look at live cattle. Livestock are what's next. Live cattle, the board, brought to us by bar chart. October is sharply unchanged at 125.10. We've got small losses in the other contracts. August down 17 cents at 120.07, and December off 35 cents at 130.77. Moving over to feeders. What's happening over there? Well, they've paired some of their losses. We're down $1.10 in August at 156.27, down 52 cents in September at 158.52. October off 45 cents in vain with that. Lean hogs, see where we're at. 152 lower in the October at 90.90. August is off 52 cents at 105 even. Kind of middle of the day's trading range there, so kind of stalling out here as we go into the close. Ted Seifried with Zaner Ag Hedge is still with me. Ted, makes sense of some of these livestock, quotes for us. What are you looking at?
Yeah, I like how you say the cattle are sharply unchanged, because that's exactly the case. And that's a little bit surprising, right? Because, yesterday, when we had all the fear in the stock market, we were down sharply. Live cattle is one of the contracts, the agricultural contracts, that's most affected by something like that. And yet we weren't down sharply. So I guess it makes sense that a day like this, where we've got a stock market taking back most of the gains or most of the losses from yesterday and sharply higher, and the live cattle don't seem to care. We are very much stuck in the mud here, Scott, because cash is stuck in the mud. And we don't see any reason. We see reasons, but we don't see any path to that cash trading higher or lower, really, for that matter. So we are just very sideways in the cattle. And, with the feeder cattle, pairing some of the losses, as you said, corn's come off of its high, so the feeder cattle can kind of come back up a little bit. So just a very routine day, I think, for the cattle market. The hogs I find interesting. We're off our highs, but still trading higher on the day. It's really the strength's coming in October. The October's really closed the gap on August in a big way. I think there's good reason for that. We're optimistic further on down the road. We're going to get more China demand as they chew through their cheaper pork supplies, as they had a lot of pigs come to market. But I'm optimistic on the hogs. I still think we're going to go fill that gap in August.
Well, that was fantastic, Ted. I really appreciate that. You've done a great job with both the grains and the livestock. That's Ted Seifried with Zaner Ag Hedge. Ted, thanks very much. We'll see you again soon. I'm going to pass it back over to Tammy.